This conference will now be recorded.
Good evening, everybody. This is Greg Morton. It is Saturday, October 1st, 2022, and this is the weekend video update for Canslim Growth Stock investors. Oh, there we go. Sorry. So as always, this weekend review is for educational purposes only, not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. So today we'll look at the M factor. We'll talk about what do we see this past week. Was it constructive or destructive action? And the hint, market was just pile driven by 20 Fed hawkish speeches this week, as well as more hot economic data coming in. So we'll look at the current market review in a little bit of detail, talk about a trading plan and our monthly educational meetings. So the M factor, as always, this is the most important letter in Canslim. When the M is wrong, nothing else is going to be right. So O'Neill teaches us to diagnose, to interpret, but not to predict the market direction. We use three things in this order of priority. The action of leading stocks, and we talked about the three Musketeers before. Could they live? Could others join in? And as it stands now, sort of like what leaders? We've got a few survivors holding up, but not much leadership. Actions of stocks owned. The group teaching portfolio is in cash on the long side, so there aren't any long positions to look at there. So that's telling us something in and of itself. And then we look at the market pulse, distribution day count, price and volume on the indexes, and the coloring book tracking. And all this is just going to show us another disastrous week that was dominated by the sellers. So let's take a look at the action. Let's go over to the index charts in MarketSmith. Start with the NASDAQ on the daily. So again, we're below all the moving average lines. They are all pointing down 10, 21, 50, 200. They are all stacked in the wrong order. And the indexes just keep coming down. And we almost undercut the June lows, and we're back to right at 35% off the peak, which was way back right around November of last year. So RS line's bad, nothing constructive really there at all. If we look at the S&P 500, we're going to see the same thing. It actually has undercut the June lows. It's now more than 25% off. Again, moving average lines all down and stacked in the wrong order. NYSE, same thing, undercut the June lows. Dow, same thing, undercut the June lows. I mean, there's no divergence here. They're all negative. Russell has not quite undercut the June lows. So it and the NASDAQ are the two that have not undercut, but they look like the tractor beam is sucking them in. And then the S&P 600 has undercut. Again, all moving averages line down, all going the wrong direction. And let's go back. Let's look at the weekly on the NASDAQ. We can clearly see the three legs down setting up during this bear market. At September 22nd, we were 10 months into this, so a little bit longer than average. I think average is about 9-month area. So if we get all the way to Thanksgiving this year, it'll be a year long. Not saying that'll happen, just an easy time frame to remember. And then the S&P 600 looks the same on the weekly, pretty clear. And it has actually started the third leg down since it's now undercut. So none of that looks real good, and the coloring book's not going to give us anything pretty either. So just starting with whether each day is a selling day or a buying day, just tons of red. We only have 5 buying days in the last 25-day window as compared to 18 selling days. We've got, you can see all the distribution. The distribution days are in white because when IBD goes to incorrection, they quit counting. And so I just turn them white to let you know I'm still counting and that's my count. So again, Friday, we had distribution on all three. That's 9 on the NASDAQ, 10 on the S&P 500, and 11 on the Dow. Plus we had clustering again, which is just like distribution on steroids. We had 4 distribution days within an 8-day trading window on all 3 indexes. And we had clustering back here and clustering back here. So sellers are just firmly in control. Market school exposure is at 0. New lows are exceeding new highs. So as of 4 p.m. last Friday, it's just really ugly. It doesn't mean it's going to stay ugly. It doesn't mean how long it's going to stay ugly, but we definitely are just mired in a bear market right now. Again, we had all those Fed speakers. Friday was 220th day of war. Who would have thought that was going to go on that long? We have another Fed meeting coming up a month away, coincidentally, November 1st and 2nd. So we've added 3 points so far. I have the rate hikes down here just so you can track them and keep up with them. So nothing pretty there either right now. So go back over here. Talked about that. So we'd been talking about the 3 Musketeers, or the true market leaders. We were watching to see if they were holding up. Some of them are holding up, but we want to see them make progress too. Last weekend, I said the bear mauls all. This weekend, I just say ditto. For instance, on Thursday, Tesla, Apple, and NVIDIA was kind of a big cap attack. All 3 of those took serious blows, and the charts weren't good necessarily. Well, Tesla was kind of maybe setting up, but Apple and NVIDIA were already showing chart damage. So none of those are good. Let's look. We will look at let's see, potential true market leaders. Let's just look at those and see how they did on a weekly basis. So in phase, I think the market was down. I think the NASDAQ was down like 2.6%. So in phase was down left. So it at least continues to hold up, to trade tightly, and looks like it's holding the 50-day. Let's look over here, or 10-week. Go to the daily. Is it holding the, oh no, I guess it's under the 50 when we came over here. Sorry. So it's showing still showing some weakness, but it held up better this week than the market. Shockwave, very strong week after a very bad week last week. Celsius was up for the week. Lithium, we've been watching, was up for the week. And Wolf was down more than double the index. So had a bad week, holding support at the 50. But again, the M's so bad, we're just kind of tracking these to see if they get whacked also. So we talked about those. Current market thoughts, things to look for. So as I said, this week, the Fed talking heads really ganged up on the inflation talk, really just following Powell's footsteps, very, very hawkish. All they're concerned about is inflation and getting it under control. They're really not concerned about what they do to the market, nor necessarily to the labor market, although that's one of their mandates, so they're going to have to take that into consideration. Just a reminder, the quantitative tightening starting in September is supposed to double to 60 billion per month off the balance sheet. They only did just over 30 billion in September, so they missed the target by 29.4 billion in September as far as the balance sheet cut. I guess that's close enough for government work, but again, when they pull this money out, again, it helped push the market up, and reversing it is certainly going to push it down, and they're not even taking as much out as they said they were going to. So current market view, all the MMTS are red, window of opportunities closed, IBDs in correction, distribution days with clustering again are piling up, selling day count is crushing buy days. It's just a distribution dominant tape. We're out there trying to pick up pennies in front of a steamroller if you're doing something on the long side right now. New lows are outweighing new highs. Indexes are undercutting the June lows, except for the NASDAQ and the Russell. They're just barely above them. But clearly we've got, looks like third legs down being worked on all the indexes. So current market signs for me, same as last weekend, still a train wreck. This is great wallpaper for your computer right now. And don't feed the bears. Violators will be murdered by the bears. That's really appropriate. I mean, seriously, don't feed the bear. Don't feed the bear your fiscal capital, and don't feed the bear your mental capital. Remember, Bill has a 3-strike rule. If you got stopped out at your stop loss on the last 3 trades, and go back and look right now, how did your last 3 do? That's telling you something. So something's wrong. Normally it is one of 2 things. Either you're off on your stock selection, or number 2, the M is wrong. And right now, clearly the M is wrong. So it's pretty easy. So do I have any good news for you? Well, yeah, we know the market is terrible now. It's not a tricky sideways market. It's actually easy right now. When the market's going sideways and whipsawing back and forth, that's the hard one to trade. Right now, pretty clear that we're in this downtrend. So the trading plan is easy. Just don't do it. That was probably Nike's slogan this week too. And definitely do not do this. So Kramer, chart suggests it's time to hold your nose and buy something. I don't know what charts he's looking at. I know along the way there was somebody that said, buy when there's blood in the streets. And then recently, and I'm sorry, I do not remember who said it or what webinar I heard it in, but I heard a lot better one is, I don't want to buy when there's blood in the streets. I want to buy when I can see something that is stopping the flow of the blood in the streets. And that's what we're looking for, that trend change. So, and don't forget, often the biggest, supposed to be one day up, are often in the midst of a bear market. So don't let these trigger FOMO, drag us back in too quickly. These are often dead cat bounces driven by short covering, and they'll be charts, just bouncing off the bottoms, not breaking out of bases or consolidation areas or valid early entries. So trading plan details are pretty easy. There is no need for Canslim growth stock investors to take any significant exposure, and I mean on the long side, until we get at least a rally day, preferably a follow-through day, or the window of opportunity opens, or the Fed pivots, or new highs exceed new lows. So we need at least one of these. And quite frankly, when this happens, you probably get 1 and 2 together, or 1 and 3, or 2 and 4 together. We're probably gonna get more than one. And the other thing we need one of these, and we have to have top-notch fundamental Canslim stocks set up in full and proper bases and breaking out, or experienced investors may take an early entry in a nearly full base that gives you an early alternative entry per your rules. So that's what we've got to have. We need to have all of that. And it's so easy to forget the one that's in red and just go, oh, we got a follow through day. I'm getting back in heavy. No, got to have this bottom of the page too. Also remember, on the positive side, the Fed is like a pendulum or a wrecking ball. It always goes too far in both directions, and its predictions are always off. So those predictions that they're going to be hiking, into the first quarter or the second quarter next year, I'm sorry, those are probably off. So we'll just wait and see. So it's a great time to, number one, study and read. Go back and watch some of the old Market Smith webinars, have Bill O'Neill and Scott O'Neill in them. Study. Number two, stay in touch with the market. Our weekend routine never changes. Might be a little shorter now, but it doesn't change. And then work every weekend to prepare a watch list, and the watch being the key word right now. But you want to be ready to go, because when this market turns, it can turn fast. And as always, don't forget, Jim Ropel reminds us of this, and so do others. The worse it gets to the downside, the better it's going to be to the upside when we start the next bull market. And we will have another bull market. I do not know when it'll start. Don't know how far away we are. Hopefully we're closer to the end of this one than the beginning. But when it goes, we want to be ready. So our monthly online meetings. Next meeting is Tuesday, October 18th. You can register at the Stockyard Meetup site. The monthly tuition is $12. Includes live attendance, full meeting, recording, slide decks. These are about 2 hour and 15-minute meetings. And if you're a first timer, when you sign up, I'll send you a courtesy copy of the prior month's meeting. So here's everything we covered in September. Covered a lot of Canslim teaching nuggets and reminders and key principles. We went through a lot of stock lists. We looked at all these lists, I believe, and then I spent the last half or 4/5 of the meeting, 4/5 of the last half, looking at a potential short candidate that was one of the SPACs. And we looked at group teaching portfolio, talked about a recent error, and IPO market still pretty much dead. So one of those things to do is study. If you don't have a written set of sell rules, I spent 3 meetings covering and teaching that. These can be ordered. The meeting recording and the slide decks, they're $15 per meeting. And then if you don't have a weekend review, spent September and October covering those. Of course, we're getting ready to start EPS season, but we really don't have to think about holding stocks through EPS season since we're not holding any stocks on the long side. So we don't have to deal with that right now. So contact information, 2 meetup sites, Greenville Eastside IBD meetup and the Stockyard meetup site. So a lot of resources are on the Greenville Eastside site. You can email me and I can send you the list of prior webinars and how to order them. You can follow me on Twitter. And of course, you're on the Stockyard YouTube page currently. So like and subscribe. And that's it. Y'all have a good weekend routine, and I'm out of here.